Hi everyone, this is Jamin Kirkwood from Secure Financial Management with your November 2016 Economic Update. In this video, we'll talk about some of the economic headlines that influenced markets last month and give you some insight into what they might mean for you as an investor. Now please stay tuned at the end for a required disclosure statement. Well, the bulls were reined in during October. The S&P 500 lost 1.94% as Wall Street responded unenthusiastically to the fall earnings season. Even though much of the economic news that emerged in October was good, investors saw an interest rate hike on the horizon and remained concerned about an increasingly controversial presidential race. Now, consumer confidence waned, but improved manufacturing, consumer spending, and retail sales numbers all factored into strong growth. New and existing home sales accelerated, the price of oil rose then quickly fell, the price of gold slipped then recovered just a bit. Overseas, a timeline was set up for the Brexit. In the big picture, appetite for risk waned as investors remained cautious. In domestic economic health, economic indicators flashed clear signals that the economy was picking up. Household spending rose the most during September since June, and household income rose 0.3%. Now, important twin gauges of business activity showed both manufacturing and service sector growth. The Institute for Supply Management's Non-Manufacturing Purchasing Manager Index jumped up to a reading of 57.1 in September, improving 5.7 points. Completing all this, the federal government said that the economy grew 2.9% in the third quarter, which is a real upturn from the 1.4% in the second quarter. However, some indicators did descend, primarily those measuring consumer confidence. Most notably, the University of Michigan Consumer Sentiment Index fell to 87.2 at month's end. In global economic health, the British Prime Minister Theresa May announced definite plans for the Brexit. The UK will invoke Article 50 of the Lisbon Treaty no later than the end of March of 2017. Assuming this occurs, the UK will leave the European Union in the summer of 2019. But until then, it intends to remain a player in all EU summits and member state negotiations. So looking back and looking forward, all three major US equity indices lost ground in October. The Dow Jones Industrial Average gave back 0.9% for the month. The Nasdaq dropped 2.3% and the S&P 500 was down 1.94%. Now, at the time of this recording, it seems highly unlikely that the Federal Reserve will authorize an interest rate hike at the start of November, as the Federal Open Market Committee has historically preferred to refrain from any policy decisions that could influence presidential elections. Now, according to FactSet data, year-over-year earnings growth is apparent for the first time since the first quarter of 2015. Still, there's nothing resembling a bull run as we enter November. Hopefully, some risk appetite will return after the election, and investors will view solid economic indicators as validation of an improving economy firstly, and as a further evidence of a federal fund rate increase second. Wall Street could see a lot of volatility this month, not merely a reflection of the election. We can only hope the evident tensions among institutional investors eases and the markets surprise to the upside. Well, that's it for the November Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Once again, this is Jamin Kirkwood with Secure Financial Management signing off for the month of November 2016. Now, please remember that nothing we talk about here should be considered a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 210-428-6250. We'd be happy to speak with you.